Hello everyone, welcome and thanks for watching the Market Report. I'm your host, Marcel Pechman, analyst and writer at Cointelegraph. Today's show debates the most pressing topics impacting the crypto market, focused on price changes and meaningful events. Our first article was written by Prashant. Binance sold USDC for Bitcoin and Ether after Silvergate Bank collapse. Cryptocurrency exchange Binance released its latest proof of reserves on August 1st. While the report presents a healthy financial situation for Binance, its USDC reserve, movements post Silvergate collapse, and the depeg of the stablecoin were the main topics of discussion. Proof of reserve shows that Binance USDC balance decreased from $3.4 billion in March 1st to $24 million by May 1st. Here you have the data proof of reserves by Binance. On 1st of March, it held $3.5 billion worth of Binance USDC, and it declined by May 1st to merely $24 million. And meanwhile, you can see that the balance of both Bitcoin and Ether increased significantly. Okay, so what is the proof of reserve? The assets that the exchange has stored on the blockchain as cryptocurrencies are called reserves. The total assets are computed by summing up the balance of the crypto addresses if the exchanges possess the private keys of those addresses. But does that answer the question on whether the exchange is solvent, meaning they have enough assets to cover the user's deposits, plus any eventual debt from the exchange or its holding company? No, by not any means or form. Although far from an audit, given that the exchange reserves could have been tied up to multi-sig wallets with third parties, Binance also recurs to a proof of liability using a crypto hash, Merkle tree, of the customer's identity to determine the sum of all customer account balances. Again, there's the risk of accounts having negative balance, and to be honest, I don't know if it's technically possible to hide such flaws, but at least it provides some additional clarity to the exchange reserves. Now, what can we exactly take from the fact that the exchange USDC reserves being almost depleted between March and May? Well, according to on-chain analyst Alexander Jakovic, this indicates that Binance used the $3.4 billion in USDC to acquire 100,000 Bitcoin and 150,000 Ether in the period, totaling around $3.5 billion. So there's the tweet from Alexander Jakovic. During the period of March, May, Binance purchased 100,000 Bitcoin, 150,000 Ether, which amount to around 3.5 billion, the same amount as the surplus of USDC they had. All that is visible in the proof of reserves. Now, the big question is whether this investment has been made by Binance users, so CZ and the company had nothing to do with it, or whether the exchange has been manipulating the proof of liabilities and illegally assessing clients' deposits for their proprietary trading. To me, even though I trust no one, especially centralized exchanges, this assumption looks a bit far-fetched. Maybe you can access some of the USDC stablecoin that is being used on margin and derivative trades, but depleting the entire balance without clients' knowledge or impact on the exchange day-to-day operations sounds too risky, far-fetched, and complicated. Again, I'm not here to defend Binance or CZ by any means, but in this case, given the amount of data presented on exchange proof of reserves, I find this assumption incorrect. Unfortunately, investors continue to leave coins deposited on exchange for much longer than they should. This creates a risk for themselves, but always a negative impact for newcomers and the general media when hacks and rug pull occurs, regardless of the safety and sound investment of self-custody. So the bottom line is, I don't think that CZ or Binance have been using $3.5 billion worth of coins from clients to buy Bitcoin and Ethereum. That doesn't sound true. Just to highlight, that's my own personal opinion. It does not constitute investment advice or reflect Cointelegraph's official view. Now, onto the show's next topic, we'll cover an article written by Prashant. PayPal launches stablecoin for payment. American financial technology company PayPal launched a new stablecoin called PayPal US Dollar on August 7. The US dollar-pegged stablecoin will be issued by Paxos Trust Co. and fully backed by US dollar deposits, short-term treasuries, and similar cash equivalents. It's built on Ethereum. So what's the difference between PayPal stablecoin versus USDC or Paxos USD? Well, basically, the integration with PayPal and Venmo apps and services. Is this a game changer in any way? Well, in my opinion, it sounds like a desperate move from a company that saw its stock price decline by 75% between July 2021 and June 2022 and never able to recover from it. Here you have the PayPal chart, and you can see that the stock price declined from $310 down to 72, 73, 76% decline, and it has never been able to recover. It's currently trading at $63. Moreover, it resonates with Elon Musk, what he's doing after acquiring Twitter and rebranding the company to X, focusing on payments, banking, and commerce. PayPal's own PR campaign says the stablecoin is designed to use in Web3 apps such as wallets, marketplaces, and exchanges. They want to participate in this market and avoid further market share loss, either to USDC coin, Tether, or Twitter's future token. Does it make sense to integrate decentralized apps and centralized payment gateways? Sure, makes easier for the normies to access it. However, there's zero benefit for the user, given that other stablecoins already offer yield and a much broader adoption in the dApps markets, the decentralized application markets. Only time will tell, but PayPal is surely not the miracle solution for the decentralized applications to access a broader market. Now onto the show's last topic of the day, written by Zion Sun on Cointelegraph magazine, Huobi in trouble or not? Asia Express. Sun, sorry if I mispronounced your name. On August 6th, local news outlets in Hong Kong reported that senior executives of crypto exchange Huobi had been arrested by the Chinese police. The exchange subsequently denied this as fake news. Chinese blockchain personality Justin Sun, the de facto owner of the exchange, also labeled the news as FUD. Okay, so one thing is for sure, we'll never get to the real story being on the other side of the world. Plus, even if you have someone covering it on the ground, odds are bribes could have been paid, reporters could be afraid of being retaliated, or Huobi simply have good enough attorneys to quickly revert and get them off the hook. However, you can't hide data from blockchain analytics. As Adam Koshran, partner of Cinemahan Ventures, claimed on Twitter, Sun illegally withdrew $60 million worth from the exchange after the news broke out. Rumors around Huobi may be behind its US dollar Tether reserves declining to less than $100 million from $630 million last month, while its total assets have fallen to $2.5 billion compared to $3.1 billion in the same period. Now that's the most interesting part. While Tether represents some 30% of Binance reserves, they are less than 4% at Huobi. Sure, that could be possible explanations, but most likely the rumors are correct, and Justin Sun has been using the exchange deposit as his own personal piggy bank. Guys, don't leave your coins on exchange. They are not wallets. Well, that's it for today. I hope you guys enjoyed the show. Don't forget to visit Markets Pro, the professional Cointelegraph alerts platform. Our proprietary indicators have been giving profitable alerts for months. There's a 20% discount link in the video's description. See you!